Hi everyone, welcome back to the Advanced Mortgage Solutions podcast. Here with your host Joel Sadler and our guest and expert Scott Miller and founder. Welcome Scott.
Good morning, Joel.
Look, Scott, there's a lot of things moving in the world at the moment, as there always are when we jump on these calls. But your monthly update or regular updates are really valuable and people are interested in them. It's the 19th of June today, Scott. So tell me a little bit about what's going on in the market from an interest rates point of view and just general properties.
Yeah, well, look, let's start globally, I suppose. That's the best place to start. Technically the war in Iran has just ended. The Strait of Hormuz is open, so we should start seeing petrol prices come down. In fact, that would mean transport prices around the world and domestically should also come down. People will have more money in their wallets and purses, so that's a good thing. Bringing that back into more of a domestic scene, I suppose, you will see those petrol prices drop down, and then hopefully the goods and services that we buy as well will start to drop as transport companies can sort of reduce their costs.
Yes.
Fingers crossed, 100%.
Fingers crossed.
And then that drifts into having a little bit extra, spare change. Where do you spend your money? And obviously one of those options is around buying yourself a house, buying a rental, buying a subsequent house, or buying another rental. It just depends. It depends where you are in your property journey. Certainly, the interest rate landscapes, it's a little bit funny at the moment. Overnight, out of the blue, Westpac reduced its 3, 4, and 5-year rate. And by 0.2%, that's a significant drop when all other banks are putting their rates up. And so, you say, what on earth's going on there? So the best I can come up with, because it only happened last night, is that they're doing a little bit of a bank war at the moment, trying to, to lock some people in for longer rates with attractive longer rates, because, it was only last week ANZ put all of their rates up, which was quite in line with what every other bank was doing. So there was nothing odd about that. What Westpac's just done is quite odd. The good thing for the end user, aka the mortgage holder, is that those 3, 4, and 5-year rates are really the areas that we're concentrating on at the moment to see people through the next interest rate cycle, which we've just come off the bottom of rates, heading up the interest rate curve into the next cycle. So that's really good news. I'm not sure if the other banks will follow or not, because they've only just put theirs up. So it would be odd to just put them straight back down again. So we'll see how that plays out. But certainly the appetite for lending is as good as it's ever been. The banks are, out there actively sort of trying to make the pathways of receiving finance easier. And they're loaded. They've got plenty of money to spend. So they're very focused, particularly in the residential market.
Yeah, and just on that, are they offer like a bonus or cover legal fees or some cashback or that sort of thing? How are you finding the market with that at the moment for first home buyers? Is there a bit of that around? Or?
So some of that got changed with a law change in that the enticements, can remember way back in the old days, you used to get a trip to Fiji if you took out a mortgage. And I don't know why, but that got found to be unfair or something, legally, and that all changed. So, but certainly the cashback, it's up there at 0.9 or 1%. The discounts, if you've got a 20% deposit, are good compared to the non-discounted rate. So in that aspect, they're open for business. There's the usual constraints on servicing rates and things apply, but once you get in, they're fairly much giving all the toys out to people to say, welcome on board,
Yeah, brilliant.
Yeah.
Well, that's good to know that that they're positive in that space for new home buyers. And then the other question that often we ask is, sort of general state of play with the market in terms of, is it a buyer's market, a seller's market? So give us your thoughts on that, what you're seeing at the moment with people buying.
As you know, Joel, we're based in Christchurch, and we're still bucking the trend a little bit compared to the national sort of direction on where things are going. So Auckland, Wellington, Queenstown are still finding it quite difficult, even still a little bit of negative growth in those areas. Funnily enough, of all places, the West Coast is the most active with about a 6% gain in prices. But you and I know, being in the South Island, that the West Coast has always been, relatively low priced, let's just say. So maybe they've got their little catch up as well. But after saying that, Christchurch has experienced a 5% growth, and that compared to the other main centres in New Zealand that's just amazing. So we're not suffering the same influx of negative growth that those other cities are. And
Right.
part of that, what we're finding is we're writing a lot of loans for people who are moving to Christchurch simply because they're locked out of the market in Auckland, Wellington, or Queenstown.
Yeah.
You know, it's surprisingly how many people say, oh, yeah, no, we've moved
Yeah.
to Christchurch for, you know, I hate to sort of say for a better life, but you know what I mean? And here we are. So things are going well. I'd say the market is reasonably hot at the moment. You know, like we're writing a lot of loans and we're settling a lot of loans. So there's certainly active market out there where people are picking up properties relatively easily.
Yeah.
Yep.
And just wrapping up, I think that was a really interesting point that you made, that people from outside of Canterbury are reaching out to you. That obviously says something around having a local expert on the ground that knows the market is important for people that are looking to, move to the Canterbury region.
It is, particularly with the EQC stuff. I mean, I know that happened in 2000, what was it, 10 and 11, so we're talking 16 years ago, but it's still having, an on-flow effect. A lot less than it used to. A lot of banks now don't ask for that kind of check and just rely on, the punter doing the check through their solicitor and those sorts of things, getting building reports, completed. But because of that, you do have to have that extra level of knowledge around that in case something does come up. Then you're familiar with what happens next and how to action those kind of things. Certainly people in areas outside of Christchurch aren't so aware of EQC.
Awesome.
Yeah.
That makes a lot of sense.
And just knowing the lay of the land, like after you've lived in Christchurch for a while, you know where the school zones are. Like in Christchurch, the school zones affect house prices more than any other city. So a house can be worth $200,000 more just because it's on the left side of the street, not on the right side of the same street, because it gets into that girls high, boys high zone. So those sorts of things always help for sure.
Brilliant. All right, Scott. Well, look, thanks for your tips and your wisdom today. If someone's looking to get hold of you to work with you, it's obviously a free appointment.
Yep.
How do they get hold of you?
Yeah, the website's probably the go-to. It's got everything on there, contact forms, it's got calculators, information around the different products that different banks offer. So, and then of course all the contact details of the advisors that work here.
Awesome. Thanks very much. We'll see you on the next episode.
Thanks, Joel.